Okay, so the next stock on this list is Tesla. So Tesla reported its fourth quarter earnings on the 26th, and initially the stock dropped after they said their factories have been running below full capacity for months due to supply chain issues. Tesla is still dealing with chip shortages, which they expect to continue throughout the year. However, Elon said that even with those production concerns, he still sees the production growth growing comfortably above 50% in 2022. Now, some analysts on the call were a little critical of the relatively vague call in regards to its 2022 outlook. There wasn't any announcement that Elon was going to do anything crazy like dig a hole under LA or sell flamethrowers, and on top of that, Tesla did also announce the project to build a $25,000 Tesla is currently on hold because Elon says the company just has too much on its plate right now. It seems like they're mostly focused on continuing to scale production between the factories and focusing on working towards full self-driving. Now, before I go any further, I just want to mention to anybody who's about to freak out over the next 30 seconds that I am not a Tesla bear. I think the company has been mostly fairly valued, and all these people claiming that Tesla is overhyped and overpriced are wrong. Okay, now back to the video. On the call, one of the analysts asked, if there was no $25,000 vehicle, do you think it's realistic for Tesla to sell more than 3 million vehicles with 2 high-volume cars and a Cybertruck in 2024? Now, Elon responded to the question saying, it's apparent from the question that the gravity of full self-driving is not fully appreciated. He expects Tesla's driverless technology should be so advanced that it's going to continue to drive their car sales all the way to 3 million cars without adding other models and adding lower price points. But the unfortunate reality is Tesla, while they have been absolutely crushing vehicle sales, self-driving definitely has been overpromised. In 2016, the company said they would be able to have hands-free trips across the US by 2017. And even now in 2022, that's still not the case. Personally, if I could buy a car that could go places and I wouldn't have to worry about driving, I am all in. I would love to buy that car right now. But right now that doesn't exist, and I'm not fully sure when it will, but I do think it seems a little ambitious to say by 2024 that full self-driving is going to drive Tesla to 3 million car sales. Okay, so when we look at the quarterly earnings report, we can see why Tesla stock has been blowing up recently. The last quarter where they earned $2.52 per share is almost half of what they earned for all of 2021. But the issue for Tesla is stock expectations are obviously very high. So even though they did a really incredible job, there's still some expectation that they'll have to continue to overperform on top of the stock market pullback. When we look at the last 10 years of revenue and profits, we can see that Tesla does have a very strong track record of growth, growing from just $12 billion in revenue in 2018 to $46 billion over the last year. So when we look at Tesla's revenue versus expenses, we can see that just like other car manufacturers, the cost of revenue is obviously the majority of their expenses. Now, I did hear a lot about how Ford and GM sell 2 to 3 million cars while Tesla only sells 1 million. Why does Tesla have a market cap of $840 billion and Ford and GM are only around $70 to $80 billion? Now, the first and most obvious answer is the rate Tesla is growing their sales is so much faster than the other two companies. And another, I think, poorly explained argument is to look at Tesla's profit margins versus Ford and GM. Now, this chart shows Tesla, Ford, and GM's operating margins, so what we have left after the cost to build, research, and sell their products, but before we paid taxes and interest and all the other expenses. Look at the rate that Tesla is increasing its profit margins. Now, I do see that GM is also showing an increase too, but look at GM's revenue and net income chart. And now look at Tesla's. It just seems like GM is probably unlikely to have the same amount of profit margin growth in comparison to Tesla. And Tesla's doing this with only about 1/3 of the car sales of the other two companies, and Tesla's still growing really rapidly. Okay, so when we look at the current forecast for Tesla, we can see the growth is obviously projected to keep on going, with revenue and profits growing from $46 billion and $3.4 billion in profit to $125 billion in revenue and $16 billion in profits by 2024. Looking at revenue growth, we can see that Tesla is expected to maintain over 20% growth going forward. So if we value Tesla between 20% for the low end of the range and 25% for the top end of the range, that gives Tesla a fair PE range of 53 to 80. Now, when we look at their valuation charted out, we can see that Tesla is obviously expensive in comparison to the trailing earnings, and that is basically trading at the projected fair value somewhere between the end of 2022 and 2024, which I would say makes Tesla trading above fair value. It's not extremely expensive where I would say sell everything now, but it's not so cheap that I would start loading up on the position. Now, that clip was a part of a much larger video that I did covering about 6 stocks, so if you want to check out the full thing, make sure you check it out right over here. And as always, thanks for watching.